Welcome, everyone. Today, we're going deep into Viant Technology's 2025 earnings report. And let me tell you, they just dropped some seriously impressive numbers. We're going to break down exactly what's going on, how they did it, and what it all means for the company's future.
But first, you know the drill. We have to get the standard disclaimer out of the way. This analysis is purely for educational purposes. It is not financial advice. All the data we're looking at today comes straight from Viant's official public earnings release.
All right, let's just kick things off with the headline number, 22%. That's the huge year-over-year revenue growth Viant delivered in the fourth quarter of 2025. Now, this isn't just a strong finish to the year, it's a real signal of major acceleration, capping off what was a truly record-breaking year for them.
So how did they pull it off? Well, here's our game plan. First, we'll look at that record performance. Then, we're diving into their biggest growth engine, which is connected TV. After that, we'll get into their AI-powered profitability, highlight some huge new partnerships, and finally, we'll unpack what they're forecasting for 2026.
Okay, first up, a record-breaking performance. And that subtitle really says it all. Outperforming on all fronts. You know, it's one thing to meet Wall Street's expectations. It's something else entirely to blow past your own guidance. That's the sign of a company that is absolutely firing on all cylinders.
And just look at how big this beat was. They told everyone to expect around $103 million in revenue, and they came in at over $110 million. That's a $7 million surprise to the upside. And it wasn't just revenue. They crushed their own targets for core profitability and adjusted EBITDA too. This shows incredible execution and some serious momentum. Let's actually visualize that for a second. The jump from the fourth quarter of 2024 to 2025 is massive. We're talking a full $20 million increase. That 22% growth is exactly the kind of powerful momentum investors love to see as you head into a brand new year. And you might be wondering, was this just a lucky quarter? Nope. When you zoom out and look at the whole year, the story holds up. Revenue for the full year jumped a really solid 19%. That tells you this is consistent, sustainable growth, not just some last-minute sprint to the finish line. But this might be the most powerful number of them all. A 45% year-over-year jump in Q4 adjusted EBITDA. This isn't just growth for growth's sake, this is highly profitable growth. It shows that as Viant gets bigger, their profits are actually growing even faster. That points to some serious operating leverage built right into their business model. So what's really fueling this fire? Well, that brings us right to the heart of their success story, the CTV growth engine. Connected TV, or streaming TV, isn't just some side business for them anymore. It's become the absolute central pillar, and Viant is really starting to dominate in this crucial space. This chart really puts it all in perspective. In the fourth quarter, spending on connected TV hit a new record for them, making up a massive 46% of every dollar advertisers spent on Viant's platform. I mean, think about that. Nearly half of their entire business is now coming from the single, fastest-growing part of digital advertising. That's a fantastic strategic position to be in. And hey, don't just take my word for it. The CEO, Tim Vanderhook, says it himself. He calls it an unprecedented opportunity, and he specifically connects CTV, addressability, and AI to faster growth in both revenue and profit. When he mentions addressability, he's talking about the critical need to target audiences without relying on old-school cookies. It's pretty clear their whole strategy is built right on top of these pillars. This leads us right into our third section, AI-powered profitability. See, it's not just about being in the right place like CTV. It's about having the best tech to win there. For Viant, that tech is a new AI platform they call Outcomes, and it's a huge reason why their profit margins look so good. Okay, before we get into the tech, let's quickly define a term you've heard me use, contribution ex-TAC. It sounds complicated, but it's not. Just think of it as the core profit their platform makes after they've paid for the actual ad space. It's a super important way to measure the raw financial health of the platform, and it's exactly what their AI is built to make bigger. So how does this outcome solution do it? Well, it's built on what they call an AI lattice brain, which is more than just simple optimization. It actually plans, builds, and runs entire ad campaigns all on its own to hit specific goals. That kind of hands-off, autonomous execution is exactly what you need to win those big, performance-based ad budgets that demand real, measurable results. And this isn't just Viant hyping their own tech. Adweek, a major voice in the industry, just named Viant AI the best strategic AI platform. Getting that kind of stamp of approval from a third party is huge. It adds a ton of credibility and proves their tech is a real leader in a super competitive field. Look, Great technology and impressive numbers are one thing, but you have to turn that into actual business. So, in our fourth section, let's look at the strategic wins where Viant is landing major clients that basically prove their whole approach is working.
First up, a multi-year deal with WHOOP. This is such a great win. WHOOP is a super innovative, data-obsessed company. For a brand like that to pick Viant as their advertising platform, well, that signals a really deep trust in Viant's tech and their ability to drive real growth.
And it's not just the new age tech companies either. They also just landed Molson Coors, one of the biggest and most established beverage giants in the world. This win proves that Viant's platform can handle the massive scale and complexity needed to serve huge blue-chip brands. That is absolutely key for stable, long-term growth.
And these big wins are part of a much broader trend. In the fourth quarter, their growth was strong across the board, especially in key areas like financial services, public services, and consumer packaged goods. Having that kind of diversity is great because it reduces risk and shows their platform works for all kinds of different industries. So 2025 is in the history books, and what a year it was. But the big question is always, what's next? And that brings us to our final section, the 2026 guidance. This is where management lays out their expectations and shows just how confident they are about the year to come. Here's the official forecast for the first quarter of 2026. They're projecting somewhere around $84.5 million in revenue and $9 million in adjusted EBITDA. Now, Q1 is always a bit slower than the big holiday quarter, Q4, but this guidance still points to strong double-digit growth over last year, which tells us they expect this momentum to keep right on rolling. But just listen to the confidence in this quote from the CFO, Larry Madden. He's not just talking about growth. He's talking about accelerating growth in each and every quarter of 2026, all while making their profit margins even better. That is an incredibly bullish statement, and he's directly tying that confidence to those big client wins we just talked about.
And that brings us to the final and most important question. Viant has clearly built a powerful engine here, combining the two biggest forces in advertising, connected TV and AI. They executed flawlessly in 2025. The challenge now is keeping that foot on the gas. So the real question for any investor is, can this strategy keep delivering this kind of incredible growth in what's becoming a very crowded and competitive market?
And that wraps up our deep dive into Viant's 2025 earnings. If you found this analysis useful, do me a favor and hit that like button. And be sure to subscribe for more explainers on the companies and trends that are shaping our economy.